Hello everyone. Today we will be taking up with two topics of objective questions in banking final accounts. If you all remember in the last lecture, I already told you that after we finished this accounting entries and amount to be transferred to P&L account, leave 5 pages for the summary. I hope everyone has left this 5 pages in the summary. So over there we are going to continue further. Okay. Now, in that portion where you have left 5 pages for the summary, now all of you give the heading Income Recognition Norms. Okay, new topic what we are taking up today is Income Recognition Norms. Okay, give this heading everyone in your notebooks. Income Recognition Norms. Now, what is this income recognition norms? Understand it. Recognition means to be recorded in the books of accounts. Okay, recognition means to be recorded in the books of accounts. So, when should the income of interest be recorded by the bank in the books of accounts is the topic we are going to study over here. I repeat, income recognition norms means what we are going to study actually is when should the income of interest when should the income of interest be recorded. Okay, be recorded means when should you record any interest as income in the books of accounts by the bank. Okay, this is the main point what we are going to study over here. Once again, what are we going to study over here? When should the income of interest be recorded by the bank? Means when should bank consider interest actually as their income and record that interest income in the books of accounts. Now understand this properly. For this purpose, whatever loans and advances are given by the bank, we call them as assets for the bank. Okay, whatever loans and advances are given by the bank to the clients, residential house owners, commercial business purposes, business loans, industrial loans, agricultural loans, whatever loans and advances are given by the banks, for the bank they are considered as assets. Now these assets are classified by the bank in two categories. These assets are classified by the bank in two categories. One is called performing assets and the other is called performing. I am writing in green letters, and the other is called non-performing assets. Okay, the other is called non-performing assets that I am writing in red letters. Okay, one is performing assets, the other is non-performing assets, NPA. Now, you can say that these loans and advances given by the bank to the various people are like, for a normal business, it can be compared with debtors. Debtors are your customers to whom you sell the goods on credit. And for the bank, loans and advances are those customers to whom you have given the money on credit. So loans and advances for a bank can be compared to debtors of others' business. What are debtors for regular trading businesses? Similarly, like debtors for the banks, they have loans and advances. So performing assets you can say are good debtors. Okay, performing assets are like good debtors. They are paying you the money on time. Therefore, we call them as performing assets. They are performing well. Non-performing assets are like bad debts. Okay, therefore first To make this concept simple for you, I told you that loans and advances is equal to debtors. For other businesses, what is equal to debtors? For bank, it is equal to loans and advances. Now in debtors, those debtors which you pay you the money timely, they are good debtors. And those which don't pay you the money on time, they are doubtful or bad debtors or bad debts. Same way for the bank, those clients who are repaying you the interest, installments, EMIs on time, they are called performing assets. And those debtors or clients who are defaulting in the payment of interest, installments, EMIs, they are like bad debts, they are called non-performing assets. Okay, so performing assets means, you can say that performing assets means no default or defaulters. Okay, they are paying you the interest, EMI, installments, everything on time, right? Bank is receiving interest, installments, EMI on time or timely. Okay, timely means whenever the money becomes due, it is paid by your clients. And non-performing assets means defaulters. Okay, they have defaulted in payment of interest or installment. Okay, they are those clients who have defaulted in payment of interest or installments. Now, RBI has set a period of 90 days for distinguishing between performing and non-performing assets. I repeat, RBI has set a period of 90 days for distinguishing between performing and non-performing assets. So if any money is overdue for more than 90 days, more than 3 months, then it comes in the category of non-performing assets. I repeat, if any money has become overdue for a period of 90 days, that means 3 months or more, then it comes in the category of non-performing assets. Okay, so bank has been given a guideline of 90 days to classify whether an asset is performing or non-performing. In case of performing, the money is overdue for less than 90 days. In case of non-performing, the money is due for more than 90 days. So this is how you will classify in your question, are the loans given by the bank performing assets or non-performing assets. Now what are we supposed to study? When should the income be recorded as interest by the bank? So what is the norms for this? Understand it. Income recognition norms for this. In case of performing asset, you will record on accrual basis. Okay, in case of performing assets, you'll record on accrual basis. Accrual basis means even if the interest has become due but not received, then it will be taken into consideration as an income in your books of accounts. And in case of non-performing assets, the income is to be recognized on cash basis. Cash basis means income of interest will be recorded as interest in the books of accounts only if the interest is actually received in cash. If it is due or outstanding, it will not be recorded as income in the books of accounts if the money is overdue for more than 90 days. And if the money is overdue for less than 90 days, then even if it is outstanding, you will record it as an income in the books of accounts, taking it on accrual basis. So this is the main point what you have to remember from our practical questions point of view. For performing assets, the income will be recorded in the books of accounts on accrual basis. Means even if the money has become due but not received, it will be taken as income in the books of accounts. For non-performing assets means if the money is overdue for more than 90 days, then income of interest will be recorded on cash basis. Cash basis means it will be recorded as income in the books of accounts only if the money is actually received in cash by the bank. If it is outstanding, it will not be recorded in the books of accounts. Now, all of you look at page 5 of your study material. You'll find this topic of income recognition norms in that. We'll read it now. If you have already written this and understood it, it will be very easy for all of you to understand it. So page number 5 of your study material, you'll find the income recognition norms. Assets of the banks are classified as performing assets and non-performing assets for the purpose of income recognition. An asset becomes a non-performing asset when it ceases. Ceases means stops. Okay, ceases means stops to generate income for the banks. Assets returning, okay, returning, cancel this 8. Income on a continuous basis is called performing asset. I told you continuous basis means there are no defaulters. The bank is receiving interest, installment, etc. timely. Okay. With a view to moving towards international best practices and to ensure greater transparency, 90 days overdue norm for identification of NPAs has been adopted from the year ending March 31st, 2004. And that is what I told you over here, that 90 days norms are taken into consideration. Any money due for less than 90 days will be considered as performing. More than 90 days will be considered as non-performing. Accordingly, a non-performing asset would be a loan or an advance where interest and installment, okay, where interest and installment of principal remains overdue for a period of more than 90 days in respect of term loans. Secondly, the account remains out of order in respect of overdraft and cash credit. Now, what is this out of order? All of you see here, it is explained what is out of order below that. An account should be treated as out of order if the outstanding balance remains continuously in excess of the sanctioned limit or drawing power. This is in case of overdrafts and cash credit. Overdraft and cash credit means what? You withdraw more money than what is lying in your bank balance. So if that money which you have withdrawn more than what is lying in your bank balance continuously remains outstanding or over withdrawn only for more than 90 days, you can consider it is considered as remaining out of order. The bill remains overdue, okay, the bill of discount remains overdue for a period of more than 90 days in case of bills purchased and discounted. So after the bills are discounted and after the maturity date becomes due, if the money is not still paid for more than 90 days, it is considered as non-performing asset. Interest or installment of principal remains overdue for 2 harvest seasons, but for a period not exceeding 2.5 years in case of an advance granted for agricultural purposes. So for agricultural purposes, if 2 harvest seasons means almost 2 years. Okay, one season of harvest comes once in a year. So almost 2 years, if an agricultural amount remains outstanding, then it would be considered as a non-performing asset. So in case of agricultural purposes, that 90 days gets extended to 2 half harvest seasons or 2.5 years. Then, 2.5 years means 2 period of 6 months. Harvest generally comes every 6 months. An amount remains overdue for a period of more than 90 days in respect of all other accounts. So in short, you simply remember this, what I made you write, that if the asset is performing, then there is no default of receiving interest, installment, etc. and the money is actually due for less than 90 days. Here the income will be recorded on accrual basis. And non-performing asset means there is default in payment of interest or installment for more than 90 days. Here the income will be recorded on cash basis. Out of order we have seen. Now what is the meaning of overdue? They explain over here. An amount due to the bank under the credit facilities is overdue if it is not paid on the due date fixed by the bank. So overdue. If your due date is 15th of March, you don't pay the money on 15th of March, then after 15th March it becomes overdue. Now this is the main point what we have to consider: income recognition. When should the income be recorded in the books of accounts? See that banks have been advised by the RBI to recognize, means record their income on accrual basis in respect of income on performing assets, and on cash basis in respect of income on non-performing assets. Okay, so once again, accrual basis in case of performing assets and cash basis in case of non-performing assets. That I already made you write over here. Performing assets, accrual basis; non-performing assets, cash basis. So finally, that theory we have already read, but what I make you write in the notebook is more easy for you to remember from practical questions point of view. Performing assets means those assets where the money is due for less than 90 days. Accrual basis. Accrual basis means even if the money is due but not received, it will be recorded as income in the books of accounts. Non-performing assets means the money is due for more than 90 days. Cash basis. Cash basis means income of interest will be recorded in the books of accounts only if the interest is being received. Okay. So let us take up with the practical questions based on this concept. Take out your study material, everyone. Practical questions. Now, in today's lecture, we are going to cover 4 questions in lecture classwork, and 4 questions will be your homework. Since they are objective questions, they are very less time consuming. You must be easily able to do on your own. So this question number 3 and 22D, which we are taking up right now, are based on this income recognition norms what we studied just now. And similar to this, question 24B of your university paper set and question 26D will be your homework. Answers of these 2 homework questions will be uploaded on the You Will Learn app. So after you solve them, you can verify your answers are right or wrong by downloading the solutions from You Will Learn app. Below your video lecture itself, in the contents, you'll find the solution of the same. So all of you look at question number 3, be attentive. Find out the income to be recognized. Okay, this is what we studied just now. Find out the income to be recognized by ABC Bank Limited for the year ended 31st March 2019 in respect of interest on advances, rupees in lakhs, as detailed below. Now all of you can see here that performing assets are given to you, and on the other side non-performing assets are given to you. Now just now what did we study? That for performing assets we will take interest on accrual basis. Accrual basis means whatever interest you earn, whether received or not, will be taken into consideration. So for this performing assets, interest earned will be taken into consideration. Okay, and interest received won't be considered. It means what? 280 is earned but 180 is received, so 100 is outstanding. But on accrual basis, even if it is due, you have to record the income in the books of accounts, so you'll record 280 rupees. Same way, 1700 is earned but 1630 is received, means 70 is outstanding. But accrual basis means even if 70 is outstanding, you'll record it as income in the books of accounts because it is a performing asset. So full 1700 will be taken into consideration. And here 400 is due, 400 is received, so nothing is outstanding. Okay, so in case of term loans, performing asset, which amount will be recorded as income in the books of accounts? 280. In case of cash credit and overdraft, 1700. And in case of bills purchased and discounted, 400. Now if we come to non-performing assets, then we won't take interest earned. Non-performing means the money is due for more than 90 days. Chances of bad debts are there. So here we will record the income on cash basis. Cash basis means whatever interest is received that only will be taken as your income in the books of accounts. So 170 is earned, but only 20 rupees is received. It's a non-performing asset. Remaining 150 is doubtful. So we will consider 20 only as our income in books of accounts in case of term loans. Cash credit and overdraft, 310 is earned, but only 48 is received. So again, remaining amount is doubtful to be recovered. So 48 will be recorded as income in the books of accounts. And bills purchased and discounted, only 70 is received out of 180, because it's a non-performing asset. Only 70 which is received cash basis will be recorded in the books of accounts. So all of you pause the video and make this format: statement showing income to be recognized. Okay, make this format. Particulars and amount you all can see, rupees in lakhs is given in the question. So pause the video and make this format of 6 to 7 lines. That's it. I repeat, 6 to 7 lines. Okay. So now, first in particulars column, you give the heading performing assets. Okay. For performing assets, in bracket, we take the income on which basis? Accrual basis. Accrual basis means whatever income is earned will be taken into consideration. So for term loans, we will take 280 into consideration. For cash, credits and overdraft, we will take 1700 into consideration, the one highlighted in green. For bills purchased and discounted, okay, for bills purchased and discounted, 400 which is highlighted in green will be taken into consideration. Now all of you give the heading non-performing assets. Non-performing assets will take the income on cash basis, means whatever amount is received will only be taken into consideration. So for term loans, you all can see the one highlighted in blue, 20 will be taken into consideration. Then for cash, credits and overdrafts, the one highlighted in blue, 48 will be taken into consideration. And for bills purchased and discounted, the one highlighted in blue, 70 will be taken as income of interest. So final total income to be recognized in the books of accounts would be how much? 280. Or if you do the total, 280 plus 1700 plus 400 plus 20 plus 48 plus 70, 2518 will be the total income recorded of interest recorded in the books of accounts. So very simple and scoring questions. For 2 to 3 marks they can be asked in your exams, and in MCQs they are very much possible. Okay, so all of you try this question 22D entirely on your own. I am discussing with you. Pause the video, try it on your own, and after that you play the video, you'll find the solution in front of you. So all of you look at question number 22D, be attentive. From the following statement of interest on advances in respect of performing and non-performing assets of Vishwas Bank Limited, find out the income to be recognized for the year 31/3/2016. This was asked in 2016's paper, so 31st March 2016. Now, you all can see first we come across performing assets. So for performing assets, we'll take interest earned or interest received. Come on, tell me fast. Interest earned or interest received? Yes, interest earned. Means cash, credits and overdrafts will take 5,000 as your income in the books of accounts. Term loans 1520, bills purchased and discounted 1600. Now non-performing assets means you'll take on cash basis. So interest earned or interest received? Interest received. So for cash, credits and overdrafts 180, for term loans 150, and for bills purchased and discounted 45. So pause the video and in the same format all of you solve this entire example on your own, and then play the video and you'll find the solution in front of you. I hope all of you would have done the solution by now. Now check your answers. Statement showing income to be recognized. As I said, performing asset will take this green color highlighted amounts. So 5,000, 1520 and 1600 for cash, credit and overdraft, term loans and bills purchase and discounted. For non-performing assets, this yellow highlighted ones, 180, 150 and 45. So total 5,000 plus 1520 plus 1600 plus 180 plus 150 plus 45, 8495. Okay. Now we take up with one more new concept. Yes, now all of you again come back to the summary. Now after income recognition norms, we take up with the next point. So all of you give the heading after income recognition norms, give the heading in your notebooks. Provisioning norms. Okay, give this heading in your notebooks. Provisioning norms. Now what are these provisioning norms? Understand this. For non-performing assets and even for performing assets, banks as per the regulations of RBI are required to keep certain provision for bad and doubtful debts. That provisioning rules and regulations for keeping some percentage of profits aside for bad and doubtful debts from bank's point of view are called provisioning norms. So here we are going to understand for which type of asset loan given by the bank. Okay, asset, whenever now I say, keep it in mind, it is loans and advances given by the bank. Okay, assets means loans and advances given by the bank. So for which kind of asset, what percentage of provision to be kept aside from profits is to be maintained as per the RBI regulations we are going to study over here. Now very first of all, as per this provisioning norms, the assets of the bank are classified. Assets means what? Loans given by the bank. Once again, assets means what? Loans given by the bank. The assets of the bank, that is loans given by the bank, are classified into 4 categories. Which 4 categories? Standard asset. All of you must be writing this in the notebook. Substandard asset. Doubtful asset. And loss assets. So they are ranked in the order of best to worst. Which is the best asset for the bank or which is the best loans and advance given by the bank is classified as standard. Now, when the chances of bad debts little bit increases, substandard. Still the chances of bad debts increases, doubtful. And maximum chances of bad debts, loss assets. So they are ranked in the order of best to worst. Which is the best? Standard. Which is the worst? Loss assets. So whatever loans and advances are given by the bank, they are classified in 4 categories: standard, substandard, doubtful and loss. Now what are these? Standard assets are performing assets. Means full chances of recovery are there. Up till now, they have been paying all the money on time. If at all it is outstanding or due, it is for a period of less than 90 days, as we studied just now. Okay, so they are performing assets. Now what are substandard assets? Those assets which remain non-performing for less than or equal to 12 months. Okay, substandard assets means those assets which remain non-performing assets for a period of less than or equal to 12 months. Now what do you mean by this? Actually understand it. First of all, non-performing itself means the money is due for more than 90 days, approximately 3 months. Further, they may remain non-performing for for less than equal to 12 months. So you can say that non-performing means 90 days, 3 months, plus they remain in that category for 12 more months as non-performing. So you can say that they have remained overdue for less than or equal to 15 months. I repeat it once again. Why do I say overdue for less than equal to 15 months? Because up to 90 days the asset is performing asset. If the money is overdue for more than 90 days, means more than 3 months, then it comes in the category of NPA, non-performing. Now after 3 months, once it becomes NPA, if it remains NPA up to 12 months, it becomes substandard asset. So for 3 months it was already overdue. 12 more months it remains overdue, then it comes in the category of substandard asset. So you can say NPA remaining for 12 months means the money has remained overdue for 15 months. So up to 15 months if the money remains overdue, or up to 12 months it remains NPA, both means one and the same, then the asset comes in the category of substandard. I repeat it one more time. If the money is due up to 90 days, it's a performing asset. Once the overdue money crosses a period of 90 days, it comes in the category of NPA. So NPA means the money is already due for more than 3 months. Now further, if it remains NPA up to 12 months, it becomes substandard asset. So 3 plus 12 months. If it remains overdue for 15 months, it becomes a substandard asset. Now doubtful asset. Here NPA for 12 months. So here it remains a non-performing asset for more than 12 months. So if any asset remains non-performing for more than 12 months, means overdue, now I need not write that in bracket again, means overdue for more than 15 months, then it is classified as a doubtful asset. And loss asset means bank has identified that the money is irrecoverable. Okay, here bank or any representative of bank has identified and they have made it sure that they will not be able to recover the money. Okay, they have identified that the money is irrecoverable. So when the bank or any representative of bank has identified that now it is total bad debts, the money is just not going to be recovered, it comes in the category of loss assets. Now, what are the provisioning norms in 4 of these categories? Okay, what are the provisioning norms in these 4 categories we are going to understand? So on the left side you can write provisioning norms. See, for performing asset, that means for standard assets. Okay, for standard assets, how you remember the things? For standard assets, if loan is given for agriculture and SME sector, SME means small and medium enterprise sector, then you will create a provision of 0.25%. Okay, then there is a trick to remember the rest. You remember RERA. You all remember this RERA Act passed by the government. Okay, Real Estate Regulation Authority. RERA Act passed for the infrastructure purpose. So that short form you remember, RERA. RERA means if the loan is given for real estate. Okay, if the loan is given for real estate and commercial sector. If the loan is given for real estate and commercial sector, okay, RERA. So if the loan is given for real estate and commercial sector, then you will create a provision of 1%. If the loan is given for, again R stands for residential sector. If the loan is given for residential houses, etc., then this 1 minus 0.25, you remember 0.75, that way. It is easy to remember. These are the norms set by RBI, so you have to remember them as such without any logical references. And A means all other. A means all other kinds of loans and advances in standard category. You will create a provision of 0.4%. Okay, so these you have to remember, learn by heart. So all of you remember agriculture and small and medium enterprise 0.25%. Then RERA. What is this RERA? Real estate and commercial sector 1%. Then R residential sector 0.75%, and A all other sectors 0.4%. Now coming to NPA, non-performing assets. In that we divide them in two categories: secured and unsecured. Now, obviously, if the money has remained non-performing for up to 12 months, overdue for up to 15 months, then secured means lesser provision will have to be created because some security is there already with the bank. Unsecured means more provision will have to be created because there is no security with the bank. So secured means you'll create a provision of 15%. And unsecured, again, further you divide in two parts. If some safeguard is available like escrow account, if some safeguard is available like escrow account. What is this escrow account? Third party guarantee. Okay, escrow account means third party guarantee. Bank has given loan to A, and in between B has given some guarantee that if A does not pay the money, then B will pay the money. So chances of recovery increases. Though the loan is unsecured, if A does not pay, then B will pay the money. If B does not pay, then it turns to be a bad debt. So if there is some safeguard like escrow account, then secured means best, so 15%. Here unsecured, so slightly more than 15%, 20% provision will be created. Okay, but all other unsecured loans and advances, okay, where no safeguard like escrow account is there, and this is also for infrastructure purpose only. Okay, for infrastructure purpose, if there is a safeguard like escrow account. For all other kinds of unsecured loans and advances in substandard category, you'll create a provision of 25%. So remember this, easy in substandard: 15, 20, 25, 5% gap. 15, 20, 25, 5% gap. 15, 20, 25. 15 if it is secured, 20 if it is unsecured but some safety is available like third party guarantee, escrow account, and 25% if no safety is available, totally unsecured. Now we come to doubtful category. So in doubtful, again every one of you divided in two parts: secured and unsecured. Okay, secured and unsecured. Now within secured, you remember two categories: 1 year, 3 years. Repeat everyone: 1 year, 3 years. Repeat it 5 times. 1 year, 3 year, 1 year, 3 year, 1 year, 3 year, 1 year, 3 year. Now what is this 1 year, 3 year? If it is doubtful up to 1 year, 1 year to 3 years, and more than 3 years. If it is doubtful up to 1 year, then 25% provision. 1 to 3 years, 40% provision. More than 3 years, 100% provision. 1 year, 3 year, and 3 percentages: 25, 40, 100. Repeat: 25, 40, 100. 25, 40, 100. Up to 1 year, 25% provision. 1 to 3 years, 40% provision. More than 3 years, 100% provision. And if it is unsecured, then 100% provision. Okay, whatever may be the period, less than 1 year, 1 year, 2 year. If it is remaining doubtful, first of all, means more than 12 months, it is NPA, or more than 15 months, the money is overdue. If the money is overdue for more than 15 months and it is unsecured, then 100% provision for doubtful debts will be created. And loss assets, 100%. Loss means irrecoverable only, so full 100% provision will be created. So once again, let us revise it, everyone, be attentive. Assets are classified in 4 categories: standard, substandard, doubtful, loss. Standard, they are performing. Okay, the money is totally recoverable. Substandard means they are non-performing up to 12 months or overdue up to 15 months. Doubtful means they are non-performing for more than 12 months or they are overdue for more than 15 months. And loss asset means bank has identified that money is not going to be recovered. Now provisioning norms for standard assets, you'll first remember agriculture and SME 0.25%. Then RERA, RE, real estate and commercial 1%. Then RA, residential 0.75%, A, all others 0.4%. Now substandard category NPA for up to 12 months, overdue for up to 15 months. Then remember, secured lesser percentage 15%, unsecured with some safety like escrow account 20%, 5% gap 15, 20, 25, and all other unsecured loans and advances 25%. In doubtful, again two categories, secured and unsecured. Secured 1 year, 3 year, up to 1 year 25%, 1 to 3 years 40%, more than 3 years 100%, unsecured 100%, loss 100%. Okay, for loss assets also 100%. So all of you must have written this in the notebook. Okay, you can pause the video and write it down if not written, or you can rewind and play it again if you have not written. Now look at page 4 of your study material for this classification of assets. Same thing what I explained you is given over here. We'll just read it again in banking language and understand it. Standard assets. A standard asset is one which does not disclose any problem and which does not carry more than normal risk attached to the business. Such an asset is, as I said, standard means it is considered as a performing asset. Substandard asset. Substandard asset is one which has remained as non-performing asset for a period less than or equal to 12 months. As I said, NPA for less than or equal to 12 months, or you can say overdue it is up to 15 months. Then there is no promise of recovering the dues in full having regard to the value of security or current net worth of the borrower or guarantor. Hence the possibility of loss in realizing such bad debts. In other words, such an asset will have well-defined credit weakness that jeopardize means harm or affect. That harm or affect the liquidation of the debt and are characterized by distinct possibility that the bank will sustain at least some loss if deficiencies are not corrected, because the money is due for 15 months. Doubtful asset. An asset which should be classified as doubtful if it remains in the substandard category for 12 months. Means more than 12 months. If it is non-performing asset, then it is considered as doubtful asset. A loan classified as doubtful has all the weakness inherent in the classified as substandard. Of course, doubtful, first of all, itself, it is a substandard asset. Okay, doubtful is first a substandard asset. So all the characteristics of substandard are present over here. In addition, that the weakness makes collection or liquidation in full were questionable and improbable on the basis of currently known facts, condition and values. Means chances of bad debts are very high. Now loss assets. A loss asset is one where the loss has been identified by the bank. See what I told you? Bank has identified that the money is irrecoverable. Or internal or external auditors or the Reserve Bank of India inspector. So who has identified that the money is irrecoverable? Either the bank itself or the bank's internal or external auditors or RBI, Reserve Bank of India's inspectors. Okay, but the amount has been written off. Okay, has not been written off. So it is identified as bad debts. Money is not recoverable as a loss, but the bank has not yet written off that amount wholly or partly. In other words, such an asset is considered uncollectible and of such little value that its continuance as a bankable asset is not warranted, although there may be some salvage or recovery value and also where no security is available. Loss assets should be written off if the loss assets are permitted to remain in the books for any reason. 100% provision, insert the word provision, 100% provision of the outstanding should be provided for. Now, these provisioning norms, as I made you write in the notebook, for standard advances or assets, agriculture and SME sectors 0.25%, I made you write this. Advances to commercial real estate, okay, RERA, I told you, real estate 1%. Then again advances to commercial real estate sectors, but residential housing, I told you RERA, our residential housing 0.75%. And all others, RERA A, all others 0.4%. Substandard category, secured exposures means secured 15%, unsecured, now 25%, this is the last one I made you write. First I made you write unsecured if escrow account safeguard in respect of infrastructure loan account where certain safeguards such as escrow accounts are available, then 20%, and all other unsecured categories 25%. Doubtful assets, again, first I made you write secured, up to 1 year 25%, 1 to 3 years 40%, and more than 3 years 100%. And of course, if it is unsecured, then 100%. And loss assets 100%. So you remember the way I made you write this in your notebook. That will help you better in solving the questions. So now all of you take out your study materials. Next question will take up based on this concept. Now again in this provisioning norms, 2 questions I'll be taking up in this lecture, and 2 questions you all will be doing in the homework completely on your own. So question number 6 and 12B of your exams I'll be taking up. 6 I'll solve, 12B I'll discuss and you'll try on your own. And then 16B and 26B you'll try completely on your own, and answers of that will be uploaded in You Will Learn app below the video lecture in the content, so you can check your solutions from the same. Presently look at question number 6, everyone be attentive. So 2 questions we are doing just now, and 2 you'll try entirely on your own. Compute the amount of provision for doubtful debts from the following details on advances on National Bank Limited. Total loans and advances are 50 lakhs. Ignore that. Total means these are the details given. The total of these you can see comes to 50 lakhs. Cross check. 30 plus 10, 40. 40 plus 5, 45 lakhs. 45 plus 3, 48. 48 plus 2. The total of that comes to 50 lakhs. Okay. So total loans and advances means total assets of the bank are 50 lakhs. Total loans and advances given by the bank to various people are 50 lakhs. Now, fully secured advances, fully secured without any default by the borrower. So we can say it is a standard asset, performing asset. Just now we studied standard, substandard. There's a best one. Okay, fully secured and without any default. No default has taken place up till now, means it is a performing asset, it is a standard asset. Now, in this category, it is a standard asset. Now tell me, is it mentioned that it is given to SME or agriculture sector? No. Is it mentioned that it is given to RERA, RE, real estate sector? No. Residential sector? No. Means it belongs in that 4th category, all others. So 0.4% provision will be created. Okay. I repeat it. See, just now we studied SME and agriculture is not mentioned, real estate is not mentioned, residential is not mentioned. Means we assume it belongs in this all others category. So we create what provision? 0.4%. Okay. Because no information is given, so we assume that the loan belongs in others category, all others category, and we will create what provision? 0.4%. Next, advances overdue for 15 months. Overdue for 15 months means not more than 15 months, exactly 15 months. So it is a substandard asset. Now within substandard, is it mentioned that it is secured or unsecured? See, if it is unsecured, they always mention it. Like here you can see in 5th category unsecured is mentioned, 6th category unsecured is mentioned. So nothing is mentioned, we assume here it is secured. Nothing is mentioned means here we assume that it is secured. So substandard asset, okay, overdue for 15 months means it is non-performing for 12 months, because overdue of 3 months, then it becomes non-performing. Then 12 more months, it becomes substandard. So overdue for 15 months means it's a substandard asset. Within that, unsecured is not mentioned, so we assume it is secured. So substandard asset and secured means we'll create what provision? 15%. Just now we studied. Substandard and secured means we'll create 15% provision. And see, I made you write overdue for 15 months. So here overdue for 15 months is given, means it is substandard asset. Advances overdue for more than 30 months. 30 months means 2.5 years, but less than 36 months. And they are secured by mortgage of plant worth rupees 3 lakhs. So for security worth 3 lakhs, 30 to 36 months means you can say it comes in the category of 1 to 3 years. First of all, 30 to 36 months means they are more than 12 months outstanding, so they are doubtful. Within doubtful, secured, and 30 to 36 months means 1 to 3 years. So what provision will be created? 40% provision will be created. On the amount of 3 lakhs, which is secured, you'll create a provision of 40%. Okay, it is doubtful. It comes in which category? Doubtful asset category. Within doubtful, 30 months to 36 months means it comes in the category of 1 to 3 years. Secured part 1 to 3 years, 40%. Out of 5 lakhs, 3 lakhs is secured, means we can say 2 lakhs is unsecured. Total amount is 5 lakhs. From that, 3 lakhs is secured, means 2 lakhs is unsecured. For this 2 lakhs which is unsecured, 100% provision will be created. What did we study? For secured 1 to 3 years, 40%, but for unsecured will create 100% provision. So this one is unsecured. Out of 5, 3 is secured, means 2 lakhs is unsecured. For that unsecured, 100% provision will be created. Then non-recoverable. Now non-recoverable means lost assets. Non-recoverable means lost assets. So unsecured also is there. 100% provision will be created for lost assets. We studied just now. Okay, just now we studied that for lost assets, 100% provision will be created. And last one, small advances not exceeding 25,000 to each borrower unsecured. Now here some information is missing. In college they have further made you write that it is related. All of you write down in bracket. It is given in the question. It is a misprinting. It must be given. It is related to infrastructure and safeguarded by escrow account. This is mentioned in the question in college. Okay. So you all also mentioned it is a misprinting. In our study material, it is not included. In college study material, it has been included. You can verify if you have got the college material. So, as it is mentioned that it is infrastructure related and safeguarded by escrow account, means it comes in that category of substandard. And within that substandard, it is unsecured but safeguarded. So, 20% provision will be created. You all can see here. Substandard, unsecured but safeguard is there, so 20% provision will be created related to infrastructure. So these are the provisioning norms what we have studied, and based on that we'll make our solution. So if we make this format, table showing provision required to be shown in profit and loss account, assets, amount of asset in rupees in lakhs, percentage provision as we have marked over here, and amount of rupees in lakhs provision. Pause the video and make these columns, everyone. I hope every one of you have done this. Now what we will do is we will solve the question in the order we studied the provisioning norms. So very first we studied for standard assets. Okay. So we will solve the question in the same order only so that you understand it properly. Now which one is standard asset over here? This 30 lakhs is standard assets. So all of you write down standard assets 30 lakhs, and on that 30 lakhs which is a standard asset, what provision is required? 0.4% provision is required. Okay. So standard asset 30 lakhs, 0.4% provision is required. All of you do 30 lakhs into 0.4% in calculator. So that comes to 0.12 lakhs, means 12,000 of provision will be created. We are writing in lakhs only, so you write 0.12. Okay. Now second, after standard, we come to Now after standard, second we come to substandard assets. Now within substandard assets, we have seen that there are three categories. One is secured, and you are given with secured also. See in substandard category, what is the secured amount here? 10 lakhs, okay, secured amount. On that we have to create a provision of 15%. So substandard and secured is 10 lakhs. On that we have to create a provision of 15%. So 10 lakhs into 15% will be 1.5 lakhs. Then in substandard we have unsecured, the diagram in the chart what I made you write, but safeguarded by escrow account. Unsecured but safeguarded by escrow account, this last one. 2 lakhs is there on which safeguarded by escrow account, so 20% provision will be created. So all of it around 2 lakhs on which 20% provision will be created. So 2 lakhs 20% is 0.4. Then other unsecured loans and advances. What are the other unsecured loans and advances over here? Within substandard category, there are no other unsecured loans and advances, so you all will write it as nil. Okay. Now we come to third one, that is doubtful assets. Now within doubtful assets, first we take up with secured again. Now within secured, we are given with only one category, that is 1 to 3 years. 30 to 36 months means we are given with 1 to 3 years doubtful. So that amount is how much? 1 to 3 years doubtful. And secured is 3 lakhs on which 40% provision is to be created. So out of that 5 lakhs, secured is 3 lakhs on which 40% provision is to be created. So 3 into 40% comes to 1.2. And then unsecured is remaining of 2 lakhs out of 5 lakhs. 3 lakh was secured by mortgage of plant, means 2 lakhs is unsecured on which 100% provision is to be created. So 2 lakhs is unsecured on which 100% provision will be created, that is 2 lakhs. And the fourth category is loss assets. Loss assets are this fifth amount, 3 lakhs, unrecoverable, non-recoverable amount. 100% provision is to be created. So on this 3 lakhs of loss assets, 100% provision is to be created, that is 3 lakhs. So what is the total provision to be created by the bank and debited to P&L account? Read everyone. 0.12 plus 1.5 plus 0.4 plus 1.2 plus 2 plus 3. 8.22 lakhs. 8.22 lakhs is the total provision to be created. Okay. Now question 12 I am discussing, and all of you will be trying it on your own. Okay, and thereafter we'll discuss the answers and you'll verify whether you got it correct or not. So be attentive everyone. From the following information, find out the amount of provision required to be shown in profit and loss account of Honest Bank Limited for the year ended 31st March 2015. It was asked for 4 marks in that year's exams. Now standard advances, now it is clearly given agriculture and SME sector. So standard and agriculture and SME, what did we study? 0.25%. Substandard and secured, we studied 15%. So easy question asked in exams, everything directly given. Doubtful and secured up to 1 year, so 25%. 1 to 3 years, 40%. More than 3 years, 100%. And loss assets, 100%. So all of you try this entirely on your own. Pause the video and try the solution on your own, and then you'll find the solution in front of you. Yes, look at the solution now, everyone. Must have done it, be attentive. As we discussed, on 30,000, agriculture and SME 0.25%, that comes to 75. Okay, 75 lakhs. On 25,000, since it is substandard but secured 15% provision, so 25,000 is 15%, 3750. 3,400 it is doubtful but up to 1 year, so 25%. 3,400 is 25%, 850. 2,600 is doubtful for 1 to 3 years, so 40%. So 2,600 is 40%, 1040. 4,800 is doubtful for more than 3 years, so 100%. 4,800 is 100%, 4,800. And 2,200 is a loss asset, so 100% provision. 2,200 is 100%, 2,200. Total provision of 12,713 lakhs is required. Two such questions you are going to try completely on your own, 16B and 26B. Okay. 4 questions in your homework, everyone be careful. Which 4 questions are there in your homework? 24B, 26D, these are based on income recognition norms. 16B and 26B, these are based on provisioning norms. Answers of these 4 questions will be uploaded in You Will Learn app below the video lecture itself. So try these 4 questions on your own and verify the answers from the same. That will be all for this lecture. Bye everyone. Take care. More elaborated points on the same will take up in the next lecture. See you in the next lecture.